Hey guys, good evening. It's Simon. It's Sunday evening, the 28th of January. And I'm doing really, actually, instead of a specific trade review, I'm doing a process review. I'm going to kind of look at last week, going to look at the week going forward, and I want to be very specific and have my mental structure and my trading structure in place so that I am ready to kill it again this week. Last week was a great week in the trading room. Multiple members having the best month uh, in maybe ever. And I'm also having a pretty phenomenal month. I wanted to make sure that I have all the pieces in place. So that involves two things. Number one, I am having a good month. I want to come in very balanced. I don't want to come in. One of the things I notice that traders make a mistake is they come in and they go, well, I've got cushion. I've made so much money. I've got cushion. And that's true, but you want to use that cushion strategically. You just don't want to fire it all over the place, right? So this is a point of going back and looking at a few examples of what worked last week, what the structure of the market looks like on ES and NQ going into the week ahead, right? And how we plan to take advantage of it. And I'm going to review specifically what what setups look good on the short side and which setups look good on the long side. So let's jump into it really quickly because I want to keep this brief, but I want to pit. Again, this is being made specifically for the members in the room. I want to put them in the right mindset to come in as a winning trader next week. So, first of all, let's look at the structure. And before we jump into that, just really quickly, past performance is not indicative of future results. You're welcome to pause and read the entire legal notice if you'd like here. But past performance is not indicative of future results, right? This is for educational purposes only. And basically what I'm doing is sharing my trading account with you in hopes it'll make you a better trader, right? One important note on that. The only way you can become a great trader, everyone makes money trading. The question is who doesn't lose it? There's only 5% of us are winners over time, right? That means 95% of us walk away from this game without money in our pockets. Can't emphasize that enough. So what are you doing that's going to separate you from the 95%? Because no matter what you think or what you do, the numbers stay the same. 5% take the money, everyone else walks out a loser. My goal is to stay in the 5% that take the money constantly. You should be asking yourself every day, what are you doing different? Okay, so let's talk about a couple of things coming into the week. So we're looking at my other computer screen, so I'll control it from over there. And first, let's go cover ES. Okay, so number one, and let's go to a weekly chart to start with, right? And if we will look on the weekly, there we go. The weekly tells us a little bit about what we need to know about the market. So one of the things that struck me as I was reading on Twitter and StockTwits and other news outlets this weekend is a number of people talking about the correction that has to be coming. Well, let me tell you, if you go back and look at this market and the one timing, notice the up elevator that this market's been following. Just not a single week. Not a single week. This was the last time back on December 24th, Christmas week. It was the last time we managed to trade below the prior week's low. Okay, so one of the ways you can avoid worrying about the hype, right? The week prior to that, the last time we traded below the prior week's low was all the way back on November 12th, the week of November 12th. It's just not happening a lot. And when it does happen in this particular market, you'll notice that in November 12th, we did trade below. Notice that we closed all the way back in within the prior week's low. It's most likely a buying opportunity. So one of the things I want to be able to do is get a balance of the emotion of going, well, gosh, it can't just keep going straight up. Well, apparently the market says it can. So let's banish that idea out of our trading, number one, and go by structure instead of by emotion. Okay, so the first thing we know, we really can't be short, right? The market won't be in a corrective phase unless we can get below 2806. Based on where we're trading right now, which is 2878, right? 2806 is the line under which you have to sneak under. And if you can't get underneath 2806, right, there's just going to be no progress. Also keep in mind on a weekly basis from the week of the 14th, you have a TPO and a volume point of control sitting at 2803.75, and you are highly likely to get a responsive buy out of that location. So you don't want to get bearish down here. You want to get bullish. When you get in here, you're highly likely to get a response. I would say your first place where you're likely to get any kind of significant run to the downside is if you got below and held below 2801. That's 75 points away. So if you do some math, right, even on our nastiest down days, we had 50 points of down day, and you really had to go back quite a bit of ways to find 50 actual down points, right? So this is at least 2 days away. It would almost be inconceivable of hitting it tomorrow, right? And so there's your marker for, are we bearish or are we bullish on ES, right? Number two thing that has to happen, if you'll notice, we closed above last week's value area high, so you just want to keep, these are simple markers, right? This doesn't have anything to do with me being a great trader, a bad trader, or otherwise. I just know I have to be underneath 28.5375 to start making any progress, and then I would expect 28.38 to 28.40. That's approximately a 35-point rotation down, and I would expect a responsive buy out of that area. Very, very simple math, very straightforward. There's nothing proprietary about that knowledge. Just do your homework and understand where the major structures are in the market. And right now, I know without a move below 28.5375, there's just no significant downside. And even then, we're going to run into 28.43, 28.38. And then underneath 28.38, right, if we consolidate underneath then I know I actually have a decent chance at a 28.06 test. Maybe, right? But that has to set up underneath 28.38. So there's just no real aggressive short setup coming into tomorrow. Now, intraday, something may set up short for me based on my intraday indicators using delta or using volume indicators intraday. And if that occurs, that'll be a setup that I'll throw out in the room. But right now in my head, for purposes of coming in the week, I don't want to bias myself to the short side. The evidence is going to have to be clear and overwhelming for me to want to take a short. Whereas the evidence doesn't have to be overwhelming for me to take a long, because there's so much cash flowing into the long side of the market right now that almost every long setup is working. So I need convincing for the short, and I don't need very much convincing for the long. That's my attitude coming into the week. So now let's break this down to the daily, since we know where the key areas are. Bill's asking me a question real quick. We will jump in over here and let us pop this back to a daily. So now on a daily, a couple of things. So notice this is value area high for last week. So for tomorrow, notice that my TPO point of control and my volume point of control are separated. That creates problems because that means that you've got, usually you want those close together, for example, right there, so that you have your profile traders and you have your TPO traders combined at one place. It gives you a stronger result. When these tend to be spread apart, you can have less reliable price action against those key areas. Okay, so importantly, I would expect a defense of that 28.5375, both because that's last week's value area high, right? And that's right below the TPO point of control. The volume point of control, I'm not so sure about, since all that volume poured in right at the end of the day on Friday. I'm just not exactly sure how much they are going to defend that. I have much more confidence over here. So, but let me take one more step. In order for me to know what am I looking for in the morning, right? And this is the most important thing. If I consolidate above 28.62, I want to be clear. I said this Friday morning. I'm coming back with this on Monday morning. If I consolidate above 28.62, I would expect that the odds are, even if I balance through here all day long, if I do not close below 28.62, my assumption will be at the end of the day that we will push out and push higher. I must trade below 28.62 in order for me to start entertaining short side trades, unless we extend way out and we get a failure of that extension, in which case it'll set up potential shorts back in. But I'll have to see it to believe it, right? So above 28.62, zero chance of shorts coming in, right? Even below 28.62, I know that I have to get past 28.53, and I expect 28.53 to get defended for a pushback, maybe to 28.62, and once it's tested and I can get underneath, right, that would set me up for a test of this naked point of control down here at 28.38, and I would then expect a responsive buyer back up for a push back up out of that area. That's value area low for the prior week, is in that neighborhood, and would simply expect to push out. So let's summarize for ES. I have to get below 28.62 in order to be short at all, right? From 28.62, I expect a response from the 28.50 to 53 neighborhood, somewhere in there. Let's call it 51 to 54 neighborhood. I expect a response back up, at least to retest 28.62. My attitude changes underneath 28.53. I think we can get a push down into 28.43 to 28.38. Last week's value area low. where I would expect responsive buyers. If I consolidate underneath 28.38, that's really where the short sets up. I imagine that would be a Tuesday or Wednesday thing for a test down into 28.06. There's not a lot of support in here. There is one naked volume point of control you should point out at 28.20, which probably gets an attempted response. But for me, the real target is down to 28.10 to 28.01 if we get underneath 28.38. And so really, if you're hearing anything bearish in there, all that is setting me up with trip areas that I know, hey, if I consolidate underneath here, right, and I start running into resistance in this area and pushes down, and I can't get back above this area, then I expect to push down. Otherwise, I am looking for longs in all of this to push back up. And particularly if we hold above 28.62, everything I'm looking for is pretty much a long side trade. Okay, let's go do NQ really quick, and then I'm going to jump into the actual execution, what was important there. If we look at NQ, okay, and we're going to do the same thing here. We're going to go look at weekly. This is, again, an exercise that I do every single morning. So number one, I must, right, to have any kind of significant move down, get below 69.1450, right? That's 100 points away right now. I expect a responsive buy at the bottom of this area down here tomorrow. If we get down there, I wouldn't expect to push back below, number one. Number two, from a weekly perspective, if I hold above 69.8250, right? 69.8250 is very important. If I can't get below 69.8250, all shorts are scalps at best. Once I'm underneath 69.8250, I then want to see what the test is into 64 to 69, right? And then that's where our real battleground begins. If we get underneath the 64 and we consolidate underneath, we have a good shot towards that 20, okay? If we get to 64 and we respond back up, the test then becomes 82. Back above 82, expect to push back out, back towards 70.40. A hold under 82 after 69.64 is tested would open the door for getting us to a push into 14. We are not bearish unless we get underneath 69.14, but I gotta tell you, if we get underneath 69.14, my target would be 68.49, where I would expect a responsive buy from that area, all the way down from 68.49 through 68.21. This whole area, I expect a pretty good sizable response back up, and we are not in any kind of dangerous territory until we clearly close below and hold behind 68.21. That is 200 points, folks. We're unlikely to clear that this week. It could all of a sudden change and everyone hit the exit doors, but that's unlikely to happen, right? So what does that all translate into? What that translates into, so let's go to the daily and then we'll go look at the chart really quick. The actual candle chart, right? So if we move this over to a daily now, right, and we look at what we're talking about, so now we get a little bit more information, right? I have to be able to get below Friday's value area high. Again, this is no secret in my trading. I'm happy to share it with anybody and teach anyone how to use this. There's nothing proprietary about it. I'll credit Jim Dalton with inventing it. It makes it very easy to make decisions. Tomorrow, we are currently trading at 70.41. If we are not trading below 69.99, there's no real short to be considered. Period. End of sentence. Consolidating above this area, just like on Friday, right? I'm going to say that again. On Friday, right, the picture I drew was if we consolidated above this area. I said it's even all right to push in, as long as we hold above this area right here, and I said it right in the market preview. It's on video. You can see it right there. Holding above 69.55 and a quarter should generate a push to the outside. Same exact pattern. Holding above 69.99, you should find consistent responsive buyers to push back to the upside. I'm only looking long up here. That means I could open from 70.41, right? Let's say this was the open right now. It's going to happen in 15 minutes instead of in multiple hours. And we nosedive, right, into 69.99, but we don't close below it. We don't hold below it. I'm looking for longs, and I have no interest in trying to capture that short to the downside. It's just the wrong side for me to keep my mentality on for making money consistently. Now, I flip my story a little bit if I get below 69.99. I'm now looking for backside tests of this area and intraday setups. If we get back in here to set up potential shorts out of this area, right? And what's the first thing I'm looking for? A test of 69.8250. Right on that first test, I initially expect responsive buyers, probably back to 69.99. Once I'm underneath 69.99 the second time and I retest 69.82 the second time, if we break through there and we get underneath, then that would open us up for a test down into 69, 69, 69, 64, and 69.55. Again, given that we're at 70.31, right? If you look at what's 100 down from Friday's close, that would put us into 69.39, and I would expect a response out of that area the first time down, only because it's such a large stretch. And then if we can't get back above 69.39 after the first bounce, 69.14, and I certainly expect a stretch out of 69.14. So that's my 2 cents about NQ and what I'm looking for. Again, the first move has to get below 69.99. And then finally, what am I looking for intraday? Let's go talk about that. And I'm going to make this really simple. I'm not going to bring out all my indicators. I share them with the members in the room and I go through in great detail. But I want to keep this very simple, right? I am looking to get above and below my last best buyer, my last best seller. So to make this as simple as possible, just and to draw it out for you, right? This is my last best sellers right here, right in the morning, right? See how I clearly close above them? See how I clearly backside test them, then I clearly push, and I was above my key area of 69.55, which was right here. So so look at what I'm doing for it to make sense, right? I came in and I said I need to be above 69.55.50. Notice we couldn't close below 69.55.50, right? We had 2 attempted sell bars. They couldn't get above it. They close above it. We test back into 69.55.50, and then we launch, right? We come back for one more test above my last best seller, right? This, by the way, only works on this particular formation and trend day up. We backside test them, and then we launch from 69.70 to 70.31. There was plenty of money to be made, right? Again, you'll notice because I was not inside of the prior day's value area, I was only looking for longs on that particular trade. And so now notice that I'm stacking. You know, it's hard to do this and talk to the air and think that you're answering people's questions. Notice that I'm stacking variables together to help me out. Above the prior day's value area high, we've gapped up and we haven't filled the gap. We're backside testing the last attempted strong sell attempts, right? And this, and granted, this it's usually not quite this simple, but that was really just that simple last week. And if you'll notice, this was your last seller. See that little doji right there? That was your last seller. See how you tested right into them? Couldn't close below, and that set up the end of the day squeeze, right? Now that only works in a trend day up in that particular environment. What did the short look like last week? If you look at the short from last week, right, you'll see that we opened up, we drove, I'm going to erase these lines. This was the point of control. This was prior day's value area high, if I recall correctly. And we had gapped, pushed down into the point of control, rotated back up. That set up my short because if you'll remember pre-market, we were trading all the way up here and we just dove in from pre-market down because we actually gapped and ran up overnight. They pushed it all the way in. Notice over here, right? My last best seller, my last best buyer. Hypothetically, either this bar or this bar, without looking at the stats, one of these two are my last best seller. See how we get above them? We get above, we backside test them, and we push. Notice that this is my last best buyer right here. Notice that I get underneath them, backside test them, and roll down, right? I get underneath my volume point of control. Notice I push down, backside test, and roll to the downside. And then importantly, right, even within the context of trending down, right, once I get above my last best seller, which actually I would call from memory is actually this bar right here, was my last best seller, and we didn't quite backside test them, right? But we came we didn't backside test them. I want to get to this point. We didn't backside test them, but when we did backside test them, and you'll notice that was a trap back inside the first hour's low. I want to show you something over here. See, the next morning we backside tested it almost exactly for that inside trap before we rotated back up. Okay, Very, very important concepts that you're carrying over day by day. If you're a patient trader, you don't have to catch the free fall or guess where the bottom is. The market will tell you where that critical information is by looking at market delta or looking at your volume prints, and you'll be able to hunt those areas down, and then you get a much clearer, concise idea of where you want to attack the market. Okay, so now let's go through the steps one more time, what we're looking for, right? So let's just pretend this is our random up day, right? Let's say tomorrow looks somewhat like this day here, right? So what am I going to be looking for in actual execution? Now we're going to do this without the benefit of knowing where the daily and weekly and where those critical areas are. This clearly, from a 5-minute perspective, becomes my best seller, right? Now this is a huge bar. There's no way for me to take this trade against the low of the day, so it's for demonstration purposes only. I would not take a 20-point stop on the setup, so I'd have to find something else, right? I clearly close above my best last seller, right? And then I clearly backside test them. See that? Now hypothetically my stop will be below this low. I assure you I don't use 30-point stops, right? And then the market pushed, right? Now for the short side of the argument, right? Let's go talk about that for a second. Notice that we're above value area. We haven't closed the gap. We're above the first hour high, and any short I take is fighting a huge battle to the downside. I really want to look right through the course of the day. You'll notice this guy right here on a trend up becomes my last seller. Notice that we close above him right here, right? And then notice on the first test back to the top of that bar, I get another responsive buy and push back out from 69.64 back towards 69.80. That's a good trade, guys. There's nothing wrong. That's at least 10 points, $200 a contract, right? That's a good trade. What will my short look like? My short will look something like this, right? Notice that I want to get underneath my best last buyer. That's this guy, right? Let's just say for sake of conversation, it's this guy as opposed to this guy, right? My best last buyer, I get underneath him, close underneath, backside test him right here. See that? That's what my short will look like, even from above, right? But it's going to have to surpass a critical area, like, first of all, trap back in, attempt above, give me some kind of delta divergence, volume divergence, tick divergence in here, then get underneath my last seller, and then that sets me up, as opposed to trying to make the short work up here in outer space. I'm trying to make the short work down here where I have friends and look for the push to the downside, okay? And I'm doing that both in ES and an NQ, and then I'm always cognizant. When we get down like this, I see this mistake over and over in traders, right? I see this mistake over and over in traders. They look at it, and they get bearish down here. They see lower lows, lower highs, and they think the market's going to go lower. Don't make that mistake. That is almost a 100-point push from high to low on NQ. It's a mistake to be bearish down here. You are looking to ignore your shorts, and you are begging for long opportunity in there so that you can push that trade up. I assure you that is all you're looking for there. So I hope that helped. My name is Simon. I'm with toughtrader.com and Trade and Perform Coaching. Don't blow up your accounts, guys. You can have a high win rate. I float around a 60 to 70, sometimes 80% win rate. I control my downside, and I stay very focused on my education, on my execution, and my risk management, and you can too. Anybody can learn how to do this. It's not an overnight thing. It's not a simple thing, but it can be done, and you can make the money you are trying to make in day trading. Of course, right now it's pretty easy because you just buy and it all goes up, right? But when we get back to a real market where it's two-sided, the money gets harder to find, and you have to know what you're doing. So anyways, hope everyone's killing it. Hope everyone's making money. Goodwill and Godspeed to all y'all. I hope y'all kill it. If you'd like to join us in the room, send me an email, tradenperform@gmail.com, and I will be happy to extend you a 5-day pass. Have a great night, guys. I'll talk to y'all later.